future belongs to organizations that can adapt, innovate, and execute faster than the competition. Technology sits at the center of this transformation. I'm Faraz Sayed, and on this channel, I'll share executive insights on cybersecurity, AI, infrastructure, and the technology strategies shaping the future of businesses. Welcome to PureStack. "74% of cyber insurance claims close without any payment, right when businesses need the money the most." Why do so many businesses believe that they're protected against a cyber attack only when they find out when they aren't? One thing that we consistently see is a gap between what a business thinks they're covered for and what is actually covered. The company buys a cyber insurance policy, checking the box. They assume that if something goes wrong, they're protected. But then a breach happens. They file a claim, and the answer comes back from the carrier: denied. According to the FBI's Internet Crime Compliance Center, in 2025 set a record of 1,008,597 cybercrime complaints. That's roughly 2,760 every single day, with a reported loss of $20.88 billion. That's a 26% jump in losses in a single year. The first time complaints have ever crossed 1 million. Data compiled from the national regulators tell the same story. The National Association of Insurance Commissioners, or NAIC, the group that aggregates data from every state insurance department, reported in 2025 market report that 74% of U.S. cyber insurance claims close without any payment. That's 28,555 claims. This outcome owners never see coming. They think that the policy is a safety net. Very often it isn't. So in this episode, I'll give you two things. First, what it actually takes to be covered, and how to recover fast when an attack hits. And the second is exact controls your policy quietly requires before you ever get paid on a claim. Get those two right, and you'll know you're covered. So now, why do so many of these attacks land on smaller businesses? Well, we hear this very often in our field from business owners. We're too small for the hacker to target us. That thought process is completely incorrect. In 2025, Verizon's data breach investigation report found that 43% of attacks are aimed at small and medium-sized businesses, and that 88% of those incidents involved ransomware. The reason is simple. Smaller businesses usually have less security in place, fewer people watching, and a tighter budgets. Attackers now know that. They go where the defense is the thinnest. And one of those businesses get hit, the damage can be enough to threaten the entire company. Why don't business owners realize that their coverage has gaps? Well, because cyber insurance is built around assumptions that most owners don't actually ever see. When you apply for a policy, you're handed a long questionnaire, sometimes more than 150 questions about security controls that you have in place. The owner signs off on it, confirming that everything on the list to the best of their knowledge. The problem is that most owners don't fully understand what they're confirming. They rely on the insurance agent, and the agent's job is to sell the insurance, not cybersecurity services. Unless the agent has real technical background, they often don't understand the controls either. So you end up with a policy built on answers nobody fully understands, and those gaps don't surface until the day a claim is filed. Now, how does that actually play out when something goes wrong? There are a couple common scenarios. The first, the business gets breached and files a claim. The insurer reviews the claim and finds out that a crucial security control that was supposed to be in place wasn't. Let's say multi-factor authentication was never set up on a new device that was deployed. That single gap can be enough for the insurer to walk away from the claim. Secondly, the policy quietly limits how much it will pay. The headlining number might be $1 million in coverage, but buried inside are sublimits. A smaller cap for ransomware, a different cap for business email compromise, another reduction if your backups weren't adequate. Most owners never read those sublimits. Many agents don't fully explain them. The coverage looks strong on paper, but the payout tells a very different story. The requirements, or what carriers actually require, when a carrier says it needs certain security controls, what are they actually asking for? This is where it gets concrete. The controls are listed on the application, aren't vague best practices. They are a specific list treated as a non-negotiable by the carrier. Starting with multi-factor authentication. A password on its own isn't enough. Every account and every device needs a second factor. It's one of the first thing a carrier checks and one of the most common reasons claims get denied. In the industry analysis of denied cyber claims, 82% involved businesses that were missing multi-factor authentication somewhere. One account, one server, one login. Without it, that's all it takes. Secondly, a properly managed firewall, not just a box that came with your internet, but an enterprise-grade firewall that's configured correctly, blocking unwanted traffic, also inspects inbound and outbound packets, keeping your network safe from bad actors. You'll also need MDR, or Managed Detection and Response. This is active monitoring service which monitors threats and responds in real time on your endpoints, for example, a server or a desktop. SCM logging is also necessary. Your system generates a constant record of activity. Carriers want that activity collected and monitored, so an incident can be caught early and also proven later. Everyone uses email. Email security is also a must. Most attackers start in the inbox, so carriers expect real protection against phishing and business email compromise. And this is a big one. If you're running a business on a free consumer-grade email service, for example, Gmail, Outlook account, or the basic mailbox that your internet provider provided you, like AT&T or Comcast, these simply don't include any type of security control the carrier is looking for. There is no real threat protection, no logging, no admin oversight on their own, and that can be enough to get a claim denied. You will also need secure DNS. This service quietly blocks DNS connections to malicious sites and attacker infrastructure that can cause harm. Every business must have a proper permission mapping. Every user should have access only to what their role actually requires, nothing more. Over-permissioned accounts are favorite targets for attacker. Patch management is also required, not just on your computers and servers, infrastructure, firewalls, switches, IP cameras, access points, all have to be kept current. Unpatched systems are the doorway to attackers. Thank you everyone for watching part 1. Stay tuned for part 2. Technology works best when it quietly helps your business move forward, supporting your people, your processes, and your objectives. If today's episode gave you a different perspective on IT strategy, cybersecurity, compliance, or growth, subscribe to PureStack for more practical insights. Thanks for watching. We'll see you next time.